So now we're going to look into that smart trade from the community at g2247.com. Mark, you said you wanted to talk about potential in the resources sector. I mean, what potential are you talking about here?
Well, no, we're interested. I mean, this is the third time this year we've got a bit of a rotation that's taking place, which has been moving more towards resource than previously, than we've had. And the big question that we're kind of debating at the moment is this the right time? Is the switch beginning to take place now? The major mining houses have been showing a little bit of support. A lot of the kind of coal and iron and various other sectors in the market are showing a little bit of support, despite the prognosis for the commodities remaining, trash, to be quite frank, in the 1-2 year horizon. But the guys, the question is, are the guys seeing enough value now to begin to acquire those? And we're seeing some material movements in AMS and various other shares.
Yeah. So Billiton, yes, positive trading update. Anglo American out today with announcements about reorganization.
Yeah, slightly.
And as you say, the commodity prices themselves have held up fairly well, considering all the naysayers about China and its growth scenario and all of that. So what are you implying? That you're not quite sure, but you think this could be a kind of transition moment, and that maybe these things begin to offer value again? Because people have made big money in the past by calling these things in a...
Look, it is a big, deep cycle kind of a change as such if things are going to emerge. There's a lot at stake. There's been a number of kind of false alarms. These stocks have the potential to drag the index with them. What's really important about our Resi index is we did a kind of analysis in terms of the index against the CRB, the broad kind of commodity index, and our index kind of religiously tracks that. Okay. Which is again a kind of linked, is dollar linked in essence. But the key issue now is this breakout something that's going to kind of carry on, even despite the demand supply fundamentals, which we know are a little bit kind of hairy.
But they're not that hairy. I mean, at one level, people are sort of talking about China slowing down, but then you read about, iron ore purchases being at sort of record levels. The oil price hasn't gone down. So do you think we could be due for some sort of positive surprises out of China economically, which could get people excited about all this again?
Yeah, unfortunately, I haven't got a very simple answer, because there's a whole complex kind of nightmare story which we're kind of working our way through. But you could see short-term continued demand in commodities for spot delivery. There's a lot of issues on the American side with the stimulus and the way that works in the financial system, and the way that's going to affect collateral arrangements, especially on the commodity side, moving forward over the next 6 to 9 months. So now's as good a time as any for the market to get started for a commodity rally. But for us, and I would suggest to anybody who's investing, got to keep watching the dollar, got to keep watching the basket of commodities, and see whether that's going to filter through, in addition to our news headlines in the sector.
And that CRB index, is that something people can just sort of Google and look it up?
Yeah, Google, have a look at it, see what it comprises. A number of different commodity-based indices, but the rally that's taken place in our market more or less kicked off straight after it.
So is it a leading indicator or just like a coincident indicator?
It should be a coincident indicator, but it's also a function of dollar movements in the commodities. So a bit kind of alongside it, but also have a look at what the dollar's doing. The dollar could be the key, rather than the actual supply demand on the currencies themselves, on the commodities themselves.
And I guess people just need to follow the conversation, because the way these things work is today's sort of random ideas, tomorrow's consensus, common sense.
Yeah, it's always worth having. It's always worth having a potted theory, because every so often they nail it, and this one may be way off, but it's a substantiation. And I think what we're trying to say is we've got to watch this space very, very carefully now over the next month. Could be a base, could be a false alarm, work out where we think it is, when we think the argument is following through, and then begin to invest and trade accordingly.